And Juna K says, "Hi, Austin and Robert. I'm a huge fan and a dedicated listener of your podcast. Like many others, I wish I had your guidance 10 years ago. I'm a 39-year-old family practice physician working part-time, and my husband is 44 and works in sales. I started doing the backdoor Roth conversions last year, so we each have $14,000 in our Roth IRAs. Now this year, he's also maxing out his HSA, which unfortunately is not an option for me. However, I have $400,000 in my personal 401k, which is all invested in the S&P 500. Here's my question. Should I continue maxing out my 401k to get that full tax deduction, or would it be better for me to contribute to a Roth 401k instead? In the past few years, I've split my contributions 50-50 between the two without a clear strategy. We're paying a 24% effective tax rate with a combined income of about $241,000 a year. This is a really good question, Robert. I think the way people should be thinking about answering a question like this, hey, I need to figure out the Roth versus the traditional. Which one should I choose? Do I put it in the Roth IRA? Do I put it in the Roth 401k, the Roth variant, or do I put it in the traditional variant? And as a reminder, Roth equals after-tax dollars, which means your money grows tax-free and you get to take it and enjoy it and spend it in retirement without paying any more in taxes on the profits. Whereas a traditional IRA, a traditional 401k, you get to write off your contributions against your taxable income in the beginning, saving you a little bit in taxes up front. But you have to pay taxes on the profits and everything that you take out and spend in retirement. Robert and I have always sat on this fence that we think it's the biggest thing people should be doing is taking advantage of the Roth variant of their retirement accounts, not only because we can't predict where tax rates are going to be in 20, 30, 40 years, but also because for our own sake of mind, we know that we don't have to worry about it. If we knew that tax brackets were going to be like 49% in 2060, then yeah, we would want to do everything we can to get as much money into the Roth so we didn't have to pay taxes on that. But we don't know what that is. We cannot predict that. We're humble enough to admit it. And so we're thinking, let's just get as much money as possible growing for us tax-free.
Yeah, I love that breakdown. And, we talked about this last week. I feel like really focusing on the Roth variant takes the gamble out of your future. So I think the best strategy here is, as you alluded to, is up to the match for what the company is offering. And then everything else you can get into the Roth is the best play, because you're right. We can't predict what the taxes are going to be in 10, 20, 30 years. We don't even know what they're going to be like in 2 years. So for us, we want to make sure to allow you to retire with dignity and not have to stress about it over that next 20, 25 years. Being at 39 years old right now, you have a long horizon of investing. And that's why we like to do the sure thing by utilizing the Roth to its max potential.
So in Juna, to answer very concisely, I would put all new contributions to your 401k in the Roth variant, so the Roth 401k. I would continue making sure all that money is invested in the S&P 500 so it grows aggressively. And I wouldn't worry about the existing 400,000 that you have right now, which you said 50-50, so maybe even only 200,000 of that is in a traditional 401k. I just let that ride. Let it grow. Don't worry about converting and paying taxes, any of that stuff. Just let your 200,000 grow, but all net new contributions should go to the Roth.